Okay, hopefully you're still all there. So, can any? Oh gosh, I'm hoping you can still all hear me. I guess you can. Right. Okay. So, what we're here to talk about? We're here to talk about the Halvening, which is a very exciting event, which has only happened twice before, and the last time it happened was in 2016, and the time before that was in 2012. I love this quote. Satoshi, whoever he was or she was, described Bitcoin thus: writing a description for this thing for general audiences is bloody hard. There's nothing to relate it to. And certainly my experience of describing Bitcoin to people is there's always an initial gap where they just don't seem to get it for a bit, and then when the penny does drop, they find how far down the rabbit hole goes. But it does take a while to get your head around it. So to those of you who are new to the subject, I'd urge you to be patient while we go through it. Standard disclaimer, please check everything for yourself. Don't believe a word I say, blah, 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 blah. I'm certainly not a financial advisor. I don't want to be one. I'm doing this just as an enthusiast. I don't make any money out of it. In fact, it cost me quite a bit of money to do it in some ways, but it's been fun. And I made some good friends in the space, and yeah, enjoying it enormously. So, okay, that's what we're going to get through tonight. As it says, welcome to the Halvening. We've sort of done the introductions. I want everybody to just say hello. The symbol on the right is because we want to mark the occasion. I'm periodically checking over to the halving clock I've got over here, which I'm not convinced it's that accurate actually, but it says we're 44 minutes away from the halvening. So I'm rather proud of the fact we actually did correctly.
That's considerably off Binance's. They reckon 12 minutes, but
I've
got one on screen as well, but yeah, what a difference.
Well, yeah, Chris, I wonder if you could perhaps, just for everybody's benefit, Chris has actually got money on when this is actually going to be. Which I think is absolutely splendid. So him and a group of people have had a little bet about the exact timing of the halvening, and so if you hear him suddenly whoop at around,
wheeling around my room or something.
Yeah, it's 7:58, Chris. I think you're on. So if you hear Chris,
that's my time.
I've got some money on it as well, Nigel.
Who's that? Nick.
Nick, yeah, I've got some money on it with Chris as well.
Oh, fantastic! Right, what time have you got, Nick?
I think I got 7:58, you know.
Chris,
I've got two different bets. I've got a bet with some of the guys on the Sheffield group, and we've got about 0.0007 Bitcoin on that one, so about £5 on that one. And then also on the East Midlands crypto group, I've got another bet. I think I've got 804 on that one, but there's less money on that. So
all right, okay.
I'm hoping for 1958.
Well, it still sounds a little bit confusing then as to who amongst the two of you is going to win at 7:58. So we'll keep an eye on that one.
Just say hello everybody.
Oh, hi George.
Hello Nigel.
Nice to have you. We're just going through some of the introductions, and we've just noted the halvening is going to happen while we're all on the call.
Cool.
So it's nice to have you with us, George. George is in Chesterfield and has been to some of the Chesterfield live meetings. This is the first time we've done this on Zoom, and you can probably tell, right? But obviously, the circumstances are different there. What the hell's a halvening anyway? We'll talk about that. So for those, a quick bit of revision there. Then Alex is going to do his wacky Bitcoin quiz, which for those of you new, will have lots of multi-guess in it, and it's a bit of fun, really. Yeah, he's done a really smashing job on that. Then I'll talk about Bitcoin and COVID-19 and the economy. What does it all mean? Chris will then talk about Bitcoin wallets, important subject. We have looked at it before. Chris has got his own take on it, which I found very interesting. Then I'll talk about the subject of stock to flow, which is probably the buzz phrase of the moment in the Bitcoin community. It has been for a while, since Safety Moose's book, The Bitcoin Standard. And then prizes. What do prizes mean? Well, in this case, points mean Litecoin stocks. Or actually, last time I spoke to Alex, he might be changing his mind. He's very precious about his crypto stocks. So we'll see about that. But that's when we'll mark and see who wins the quiz, and then we'll wrap up for the evening. Okay. So yes, we've all said hello. I do hope you've got a half pint glass to hand. Bitcoin is around 11 years old today, and it's just about to get cut in half. And when I wrote that slide, the ETA was 7:40 p.m. As you can tell, it's gone back slightly, but it has moved around. At one point, it was going to be tomorrow morning. So, Chris, if you could ring a bell or sound the alarm when we're getting there, I feel that we ought to at least mark the occasion with a swig of something alcoholic. So if you do that for us, that'd be...
Yeah, no problem. Like I said, I've got Binance's countdown. That's the one I've got on, and they've got a block height on there as well. So assuming the block height's up to date, then it should be pretty accurate. So yeah, I'll give you a shout.
Okay, thanks. I'm sure Binance would never dream of doing anything dishonest. Okay, so what the hell's a halvening anyway? Lots of words, probably the wordiest slide in this. But basically, the halving, sometimes referred to the halvening for those of you with a Middle Earth orientation, is a moment where Bitcoin's block reward gets cut in half. Happens every 210,000 blocks, and we're rapidly approaching the point at which it will have 630,000. It's very much programmed in. It's a key feature of Bitcoin. The key point here is the comment in the middle, that Bitcoin is designed to have diminishing new supply of coin. This is quite a novel concept for modern individuals who are used to currencies ballooning in volume. Bitcoin is actually going the other way. It's gradually, the amount of new Bitcoins going down, not up. And at the halvening, the amount of new Bitcoin will go down by 50% every 10 minutes. So, as it says on here, initially, when Satoshi created Bitcoin, each Bitcoin block generated 50 new Bitcoins into the community. Okay, and each new block comes along every 10 minutes or so, just varies slightly. And so every 10 minutes, 50 new Bitcoins were produced. Following the first halvening in 2012, that was cut to 25. And then 4 years later, it was cut to 12.5. And in about 20 minutes, in fact, less than that, 10 minutes, something like that, depending who you believe, the block reward will fall to 6.25 Bitcoins. And that this halving effect will happen every 4 years or so. It's actually every 210,000 blocks until it reaches 0 in 2140. For the observant amongst you, you can't halve a number and get to 0, of course. What actually happens is you get very, very close to 0, but programmatically it gets to a point where it's so close as makes no difference and it is reduced to 0. So after 2140, we've got all the Bitcoin we'll ever have. So those of you who manage to live that long will get to see the end of the block reward. So well done. Just a bit of context here. The thing at the bottom in red is the most interesting thing. Over 87% of all the Bitcoins that will ever exist do already exist. They've already been mined. Okay, that means they've already been created. And in fact, the exact number there when I wrote this slide was 18,368,838 Bitcoin. No, it's slightly more than that now. That was, I think, when was the 8th of May? That was on Friday when I did that. The total Bitcoins will be 21 million. So if you divide 18.3 million by 21 million, you get 87%. So there's only 2.6 million Bitcoins up for grabs if everybody who's already got them decides to hang on to them, or indeed loses them. There have been quite a few lost ones. Estimates vary from about 1 million. I've seen estimates up to 4 million of lost coins. But lost coins are never replaced. So a graphic view of this, showing where we are. Because of the different halvenings, the rate of new coin creation gradually decreases. So you can see there, to start with, the first 210,000 blocks, new coins were coming along very quickly. There were 50 new coins every 10 minutes. Then, as we've seen with the halvenings, that drops off. and gradually the curve flattens. The red arrow is pointing at today, in effect, and saying, well, that's where the 87% is. The red line is the effective inflation rate. Inflation is actually the creation of new money supply, and in economics. And obviously, if you create fewer coins, it follows the inflation rate is going down all the time. So you can see it started off, well, it was an infinite rate. With the first block went from 0 to 50, and then the next would have been 100% because it went from 50 to 100, and so on. And now you can see we're getting down to some very small numbers, and we'll come back to what that means later on. But it's quite a striking graph, I think you'll agree, particularly because that contrasts with the current fashion for creating lots and lots of new currency, whatever your particular favourite fiat currency is. And that's essentially all I've got to say, really, what the halvening is. So I don't know if anybody's got any questions on that. Feel free to unmute. But essentially, that's what we're doing. We're halving the supply of new Bitcoin coming to market. Okay. Okay. In the absence of any questions, the next thing I'd like to do is have a bit of fun. So we're going to ask Alex to run his Bitcoin quiz. So, Alex, are you receiving me?
Yeah, I'm here.
Okay.
The lights are on, but no one's home. Let me just get it. I'll need to share it. I think you might have to approve it. Give me one sec. I've never done a quiz before, so bear with me, guys. I've tried to make this as fun as possible and tried to make it. I'm sorry if you don't know much about Bitcoin. I've tried to put some easy stuff in there, so if you don't worry if you don't get loads right. It's just about, you know, taking part. So okay, so just give me un momento. So if I go and share my screen, so what you'll need before we get going is you'll need a good piece of paper, a white, probably a full A4 piece of paper. There's 24 questions, or maybe there's a couple of bonus ones in there, maybe 26 total. So I'll just give you a few minutes while I'm setting up just to make sure you get, you know, a good sized piece of paper. You might need both sides. Me and Nigel talked at length about how to do this. So what we're going to do is we obviously believe in trust. And so what we're going to get you to do is you're going to mark your own sheets. I'm going against all that I stand for here. I don't even trust myself when it comes to a pair of Litecoin socks. So what you'll need to do is just get a pen and a piece of paper and then write it as neatly as you can, because we'll go through it and then we'll have a couple of minutes just to relax, and then we'll go back through the answers. Or maybe should we do the answers at the end? What do you think, Nigel? Just to break it up.
How we like, really. I was thinking of doing the answers
straight away, or
later on.
Yeah, do that. We'll do the quiz, and at the end we'll do the answers, and we'll just go through them, and we can all just guess, and then we'll get the winner. Do that.
Okay.
Then.
Before we start, according to Binance, we've got about 45 seconds left.
Oh, we'll wait then if you want.
Yeah.
So yeah, it might be worth hanging on for a few seconds.
Yeah, that would
be Bitcoin's bombing as well, which sucks.
Yeah. So so I think we've seen incidentally, while we're on the subject of current price fall today, it's classic buy the rumor, sell the news move, which any experienced traders will be familiar with. So we've seen a run up ahead of the halving, and then a sell off as the actual event happened.
It did it last time too. It crashed 30% last time.
Yeah, so we would expect a fall off. Well, I would certainly expect a fall off to start with, but we'll see how that goes. Have we got everybody? We seem to have lost Andy, but as far as I can see, we've got everybody else.
I feel Binance, sorry to interrupt, I feel Binance has let us down slightly, because when you look at the block height, we're still on 6299998 now, and yeah, the time is gone, so they've messed up there.
Well, okay, in that case, maybe my original method was satisfactory, because that's showing as 27 minutes, which I think is probably probably more reliable. So I can keep that.
Okay, yeah, I'd say you've got about, according to the block height, if you look on a block explorer, about 20 minutes still to go. So
Yeah, it's currently estimating 27 minutes. So that
perfect. Let's go with that. Binance have failed us again.
Binance have been found to be unreliable. Who'd have thought? Binance have a somewhat dubious reputation for those of you who are new to the subject. You can probably tell by our slightly jaded remarks. Okay, so Alex, do you want to lead on this on the quiz?
Yes, I'm going to try and share screen now. So I don't. Can everyone see my screen now?
Yeah.
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 Okay. So
I can't
again,
yet.
this is the first time I've done a quiz.
Oh,
so
yeah, I
just
can
bear
now, yeah.
with me.
Yeah.
Can you see me? Can you see
Yeah.
it? All right.
Yeah.
Okay. So you just. I can see two screens. I'm making sure you got the right one, so you can just see a big Bitcoin split in half with the halving quiz made 2011. Yeah, that's the only one you can see.
That's the board.
Yeah. All right. So I've split this into 4 sections. I'm trying to keep it as fun as possible and try and go with the half theme. So we've got four rounds. We've got my other half, which is all about Bitcoin. That's what my wife describes Bitcoin. He's my other half. I never ship about it. And so round 2 is getting there is half the fun. So this is all about sort of movements of Bitcoin. So I'm sorry again, if you don't know much about Bitcoin, just have a guess. Round 3 is they ain't half bad. This is about altcoins. So this is when we refer to altcoins, we mean cryptocurrency apart, which other coins, which is not Bitcoin, basically. You'll get the gist in a bit. And the last one is about crypto personalities called half-wits. Okay, we're going with the half themes. Yeah. Okay, we need to limber up. Okay, before we get going, some serious stress going on here. So we're going to go straight into Bitcoin. All right. So can you see this okay?
Yes,
okay.
It's very clear.
Yeah. Okay, cool. So round 1, my other half. Okay. So you kind of helped a little bit here, Nigel, which is kind of nice. So for those who don't know, so the first question is, halving of the Bitcoin network is an event which is triggered by how many blocks? Okay, so we've just been talking about this happens every 4 years, but it's the amount of blocks what actually trigger it. Okay. So is it 500,000, 300,000, 210, or 1 million? Okay.
Is that a Bitcoin price prediction you got there? Or?
It's currently bombing, by the way, which sucks. All right. So number 2, which day celebrated? Oh, sorry, one second. Let me just get this. I can't see because my cameras are in there. Okay, I can see it. Which day is celebrated in cryptocurrency world as Bitcoin Pizza Day? I'll explain what this is a little bit. So this is basically the first purchase of a product of Bitcoin is attributed to the buying of pizza, and that's why we talk about Bitcoin Day. I'll go into this more in a bit, exactly what it is, but what day? 4th of July, American Independence Day, May 22nd, December 10th, or February 5th. Okay. Next question. So this goes along with the pizza, and this is, I've tried to make it a bit educational as well. So this transaction, what happened on that certain day, how much Bitcoin was paid for the 2 pizzas?
We're still looking at the, that's it, yeah.
Oh, is it a bit slow?
Yeah, no, we're there now, we're there.
Sorry, I'm tethering off my mobile phone, my broadband's gone, so if it does that again, just let me know.
Yeah.
I pressed it ages ago.
All right, okay.
So yeah, so we just talked about what day was sort of Bitcoin Pizza Day, but how much Bitcoin was paid for these pizzas?
Was that per pizza?
No, for both.
Right, okay. The total bill for the 2 pizzas.
The total bill, yeah.
The really fun bit is trying to work out what that's worth in today's money, but
yeah, for each slice.
Yeah, that's right.
Each pepperoni. Yeah, but it's for the whole transaction. So this guy, which I'll explain in a bit, came on to and posted a thing. Whoever brings me or sends me 2 pizzas, I win this many Bitcoin. Okay, everyone there then? Yeah, most of them are multiple choice. There's a few which aren't. Okay, question 3. In which year Bitcoin's Genesis block mined? So when did Bitcoin start, basically? Was it 08, 09, 2010, or 2011? And famously, the first block had Chancellor on the brink of second bailout for banks wrote on it on block 1. So that's why I put this. So this is actually the front cover of the paper on that day. I've removed the date, I think. Anyway. All right.
No, we've got it. We've got it right. Okay.
Oh, I'm sorry. Sorry.
It's all right. No worries.
Yeah, I clicked it before I even started talking about it. So I'll wait.
Are we on question 4? Haven't we had 4 questions?
Yeah, this is the 4th question.
Fourth question,
yeah.
Sorry, yeah. So this is how I've done it. There's question. So there's question. Can you see me changing pages?
Well, we can see each new page once you've turned the page. It just seems to take a while for us to get them.
Oh, so basically, the first page, which was the halving one about how many blocks, was question 1. The pizza one is question 2A and 2B. Sorry about that. I'll go through this. So the pizza one is question 2A, which day, and 2B was how many Bitcoin. So there's a bonus one for 2. I'm sorry about this. And then I've got question 3 for the when was the Genesis block. So I'll just state what the question is as we go through.
Okay.
All right. So this is why I'm going to do it. And then I'm on question 4 on mine. So it's up to you how you want to do it. But I'm question 4. So has the page changed yet?
We're still looking at how much was. Yes. What's the smallest?
Yeah. So this has got there's not too many questions like this with A and B, but I'm just going to do it. I've just got a little fun. So this is actually 4A. So I'll state this at the start of everyone. So 4A, what is the smallest unit of Bitcoin called?
We've got some musical accompaniment somewhere.
Oh, that's mine, Stars. I've got to get up and turn it off.
I thought 4A was the year Bitcoin was launched.
No, that was 3.
Sorry?
Sorry about this. Sorry about this. We'll nip this in the bud straight away. Basically, it was a mark sheet originally, which you would normally have had, but we decided against it. So question 1 is halving on the Bitcoin network. It was triggered on how many blocks? Yeah. So question 1 is question 1. Question 2A is which day is celebrated as Pizza Day?
Yeah.
2B is how much was the Bitcoin was paid for the pizza?
Yeah.
3 is in which year was Bitcoin Genesis block mined?
Okay.
And then we're on 4 now. 4A. We're on 4A now. Sorry about that. It was easy with a mark sheet because I just done it all for you. So, but yeah, so we're on 4A now. It doesn't happen much, this A and B thing, I promise. Okay. So we're now on 4B. Okay. Right. Can everyone see the new screen, which is about the decimal places?
Yes.
Yeah. So again, going with this small increment thing, that's why I've kept it as A and B on 4, is 1 Bitcoin has how many decimal places? So how many times can be broken down 1 Bitcoin? Is it 10, 8, 7, or 3? And that's question 4B.
What do you win if you get everything? If you get the high score?
The Litecoin socks. Hopefully, it won't be someone in Copenhagen or somewhere.
Cool.
I'll send it wherever there. I've got some Monero ones, but I can't give these away. I have to keep these ones. But yeah, I'll send it wherever. So wherever you are, you can get it. Unless there's a draw. If there's a draw, I'll give you both. That'll break my heart.
Beach.
That would be cool. All right. Then I'll just. In fact, I'll press the page now. Just so we're on question 5 now. Just let me know when it's changed.
Yes.
Yeah. Okay. Again, we're trying to keep it simple here. So, what is the maximum number of bitcoins available for mining? So, basically, a max amount of bitcoins really what will become available. Is it 1 billion? No one knows. An unlimited supply, or 21 million? Again, this is good. If you don't know any of this stuff, it's really educational. So that's question 5.
Okay, next.
Yeah. Has that moved?
Yeah.
Okay. Bitcoin's block reward, and Nigel talked about this a minute ago. Bitcoin's block reward will become 6.25 Bitcoins today. So when it halves, it's going to be 6. Okay. What was the original amount? What was the original reward before any halvings took place?
It does look like we've actually joined this up, doesn't it? Like a seeded answer.
Seamless.
Yeah.
That's good. I like it.
Yeah. This next
Okay.
one, you might want to move them on.
That was question 6. Okay. So now we're on round 2. Getting there is half the fun. This is more technical stuff. So, and some education. So this is question 7. What was the Bitcoin US dollar exchange rate when it was first traded on the exchange for the first time? So obviously when Bitcoin came out, you could mine your own Bitcoin. I guess you could trade it, but there was no place to buy it. So the first exchange what came out, how much was 1 Bitcoin? So was it $1 for 1 Bitcoin? Was it 50 cents Bitcoin? It's a secret. Or was it 0.003 cents per Bitcoin? It's a good one, this. It's a very good one. Okay, and that's question 7. All right. Okay. Has that changed? Right. Yeah. Question 8.
It's not changed here yet. Yes.
Yes. Sorry about this. Okay. Question 8. In what year did Bitcoin have the largest relative growth so far? Was it 2011, 2013, or 2017? Again, this is going to be, it's difficult, isn't it? Throwing a dart at the board a little bit, but have a think if you...
Yeah, it's a tough one.
It's a tricky one.
Okay, move it on.
Yeah. Okay, so that was question 8, the last one. We're now on question 9, and this should be an easy one. What was the highest Bitcoin? What is the highest Bitcoin's been in dollars so far? Okay, was it 25,000, 15, 20, or 55,000? What's the highest it's ever reached in dollar value? This is question 9.
I love the picture.
Yeah, Cointelegraph really helped me out, actually. A couple of their questions are nicked from theirs as well, so I've got to give them some credit. Okay, so what's the highest dollar value it's been? So that question 9. Okay. All right. Question 10. Bitcoin has suffered many losses due to security breaches over the years. Which caused the greatest loss? So it's the greatest hack, basically, has happened so far.
Is that in terms of Bitcoin rather than Bitcoin?
Bitcoin. Oh, yeah, these are all Bitcoin. We're not onto the alts yet. Yeah, good question. But just Bitcoin, yeah. What's triggered the biggest Bitcoin crash through a hack? So Bitfinex hack, the Craig Wright debacle. Well, that happens every week, to be fair. Mt. Gox collapse. Or the coin check failure. Sorry, it should be pretty easy this if you know anything about any of the hacks. And that's question 10.
In Bitcoin rather than dollars?
Good question. It's dollars. It's dollars actually, but I think they're both the same. I think they're both the same, to be honest. That's a really good question. That's a really good. I think they are both the same. I've got, when we go back through it again, when we whip through it again later, I've actually got the amount of Bitcoin and the amount of dollars what was lost. So
If it's the one I think it is, then it's the same.
It's not a trick question, this.
No.
It's the one you'll have heard of. Okay, question 11. Really good questions there. Question 11. Which year, and this is the last one, this is the last technical question, thankfully. Which year was the least volatile period in Bitcoin's history? This is dollar. So, which year was it where not much happened? It was Bart Simpson year, pretty much. 2010, 11, 14, or 16?
Not much in Bitcoin terms is a relative concept.
Yeah, no major crackers this year.
We're under 20 minutes now, just for the record.
We've been going 20 minutes.
No, we're under 20 minutes in terms of the halving using blockhalf.com. 19 minutes and 16 seconds to go.
This is brilliant.
Yeah.
Okay, so actually I think there is one more. Question 12. The sharpest fall in Bitcoin's history saw the price fall 94% in 1 year. In 1 year. Which year was this?
Oh, dear.
The rest of them are quite fun, so. But again, it's really useful. I mean, this is really educational. It's great.
I am coming, sir. Just don't tidy all this mess away.
Okay, so that was question 12. Largest fall, 94%, which year? Okay. All right, round 3. They ain't half bad. Okay. So this is the altcoin one. Okay. So question 13 is, there were several early attempts at creating peer-to-peer internet currency before Bitcoin. Which one is not real? Okay, so this should be quite easy and quite fun. Okay, A, BitGold, B, B-Money, or C, E-Silver.
Interesting. Yeah, one of the interesting things about Bitcoin was that it was about the 5th attempt to create digital money. So it was really very much a cause célèbre at the time to actually create one. And there were people running around going, "This will never happen. It will never work." So it really was building on previous projects in some ways.
Yeah. So that was question 13. We're on 14 now. Okay. The first game built using Ethereum technology was called CryptoMon, CryptoBox, EtherGame, or CryptoKitties. Okay, and that's question 14. All right. Okay. So question 15. Which token is used on the Ethereum network? Is it ERC20, 21X token, ERC721, non-fungible, non-fungible tokens?
Fungible.
Fungible. I love the word. Okay, things will get fun, I promise. This is it. Okay, question 16. I thought Richard was going to be in this, so I put this one in for him. And he's not here. Oh, is he? I couldn't. No, can't see him anyway. All right, Monero. Monero's mining algorithm is called, if there's any miners out there, Kryptonite, RandomX, CA256, or MonX. Okay, and that's question 16. Okay. Okay, this one, question 17, is all about when these altcoins were founded. Okay, so I always forget when they started. I feel like they've always been here, like the whole time. And then when you actually look at the actual date, they've not actually been here that long, which is crazy. So what I want you to do is place these in the right order. So which one? So I would place them from left to right. Which one started the first, and then the second one, and then the last one, the one on the right being the oldest one. Sorry, the newest one. So which one started the first? You don't worry about dates, but just sort of move them in order as being the oldest, the mid, and then the newest.
Yeah, it's a good question.
Okay.
Okay.
Okay. Question 18. So, if any of you trade any cryptocurrency, you'll start to learn the ticker symbols. I wake up in the night screaming them most of the time. And they're really important when trading. So when you're trading, it doesn't normally say Bitcoin; it'll say BTC or Ethereum ETH. So again, getting to know the sort of obscure ones are really cool. So which ticker symbol is linked to which crypto? If that makes sense. So just link them. So which one's XLM, which one's Zen, which one's, and so on. I've made it a little bit tricky for you, but they are all quite well known.
Bizarrely, that Bitcoin has two ticker symbols, doesn't it? Because it also says XBT as well.
Oh, yeah, yeah.
Which is immensely confusing when you first come across it.
It is. Yeah, you think it's a fake, and then thank goodness it worked. Is it Bitfinex? Is it Bitfinex what uses it? I can't remember.
One or two that use it I've come across. I can't remember which ones, but
yeah. Yeah, it is weird, that, isn't it?
Yeah.
Okay, everyone cool with that? Okay, 19, question 19. Okay, last round then. Halfways. Okay, my favourite question. The legend who is John McAfee. McAfee, sorry. How old is he? Is he 65, 71, 74, or he died 10 years ago?
He looks terrible.
Yeah, say that again.
I say he looks terrible in that picture.
No, he's just weird. Yeah, I follow him on Twitter and he absolutely cracks me up. So yeah, but how the heck old is he? He's had an interesting life.
Yeah, he certainly has.
Has anyone seen the Netflix documentary on him?
Yeah.
Yeah, he's bonkers, isn't he? Absolutely bonkers.
It's scary.
I know. Anyway, sorry, carry on.
Yeah, if you've not seen it, watch it. It's hilarious. Okay, question 20. We're nearly there. Which performer was the first to start accepting cryptocurrency for their records? Was it 1, Radiohead? Well, A, Radiohead. B, 50 Cent. C, Björk. Or D, Childish Gambino?
Is that actually the name of a band? Excuse me being so unhip.
Yeah, he's really famous. You'll know if you look him up. He's on loads of films. He's on Community and.
All right.
Yeah.
Love the picture.
Okay, that's question 20. So everyone got that? Everyone cool with that? Right. Question 21. This is a tricky one. Again, if you don't know crypto, I'm sorry. So, who are these guys?
Ooh, that's tough.
So these are sort of crypto celebrities, sort of coders, CEOs.
That is a good one. I'm going to kick myself over these.
It's a tricky one, isn't it?
There's one easy one, isn't there? The one on the right, I think most people should get.
Yeah.
I recognise 2, but not 1 and 3.
Yeah, that's where I am, Sue.
But I don't know who 2 is, but I know I recognise him.
Yeah.
I think I know who 2 is. 10 minutes, 19 seconds. We'll have to sing Old Lang Syne or something.
I wonder what the crypto version of that is.
I tried to think. Okay. Shall we?
Geeks wearing unicorn outfits. Okay. Everyone all right? Does anyone need any more time? Everyone all right? So that's 21. Again, don't worry. Some of these are tricky. Okay. Another bit of trivia. Which crypto CEO paid $4.5 million to have lunch with Warren Buffett recently? Last year, I think. And the same guy in the news that we've been talking about, he's been trying to ask for a bailout from the US. I don't know if you've been reading about this, but the same CEO has been asking for a bailout in the US because of the coronavirus.
Wow.
He got
Yeah, look at it.
he got it.
Oh, did he?
He actually got the bailout. He's been boasting about it. Now everyone's really upset about it.
Oh.
Well,
Yeah, John McAfee went on the rampage yesterday about it, saying how disgraceful it was.
I don't know who that is. Okay.
All right. So nearly there now. Question 23. One of my heroes. So who said this? Okay, I'll try and say it properly without messing up. I remember some white paper back in 2008. He had this section on how identity works in Bitcoin. I remember reading it. Probably when I wrote it.
The biggest bastard in the blockchain space.
Yeah.
I've seen this, and I think he's joking when he says it. I would never normally stick up for this lowlife, but I think it was meant as a joke. You watch it again, I think it's meant as a joke. I'm not saying he did write it. I'm just saying I think it was his idea of being cute or funny, like folksy, and he's just not got that in his tool bag, so it just comes off as really naff, right?
All right, this is the last question. Okay, so in 2014, the world believed they had found Bitcoin's creator, Satoshi Nakamoto. Obviously, it wasn't. At first, he kind of said he was, but he's not. But he does have Satoshi Nakamoto, but that's his middle and his last name. Okay, what's his first name? Does anyone know that? This is really difficult. Again, it's educational. So, what's his first real name? Okay, it's a tricky one, but at least you'll know after this what it is. Okay, so what we'll do then, we'll leave it now, and then you guys can talk, and then at the end we'll quickly go through the answers, and we can mark it, and you guys can tell me who's got the best, got the most.
Okay. Thanks, Alex.
No worries.
I'm going to see if I can pick this up again. Can everybody see everybody again? Are we back on that? Yeah, we're all back. Andy's cooking again, and and other Andy, hi. Okay, so just checking the time. We've got, according to bitcoinblockhalf.com, 6 minutes 42. According to Buy Bitcoin Worldwide, we've got, it's stuck on 18 minutes. It's been a bit contrary. So, Chris, have you got a view on where we're at with this?
Well, I've given up with the countdowns. I'm literally watching blockchain.com, the block explorer, and yeah, we're on high 998 at the end, which was mined 11 minutes ago. So I expect 999 to be any time, probably shortly.
Right. Okay. Yeah. Probably watching the blockchain is probably a good idea. Okay. So
you just don't get a countdown that way. It's just going to be suddenly a woohoo now.
It lacks the Big Ben effect, unfortunately. All right. So I'm gonna. We'll just, if you want to cry out, Chris, when you spot that we're there. I think we ought to mark the occasion. You should hopefully be able to see my screen again. Okay, I've put together a couple of slides on Bitcoin and COVID-19, but as it says here, it's complicated, and it certainly is. But a lot of people have speculated on what this means for Bitcoin, good, bad, or indifferent. Maybe there's been a lot of discussion over the years about Bitcoin being correlated with this, Bitcoin being correlated with that. my experience is Bitcoin's got a mind of its own, as a subtle correlation with anything. But of course, you know, human beings are pattern forming machines. You know, stare at a cloud and you'll see a lion's face or whatever. And there is a lot of that. Bitcoin is generally pretty uncorrelated, though I suspect it has been correlating more with risk assets in the last couple of years, which is to say equities, stocks, very loosely, as people seek out greater returns. Going back to COVID-19, definitely changed all our lives. The mere fact we're having this call over Zoom sort of shows that. It's also changed the world economy. We've seen an avalanche of financial stimulus around the world on an immense, unprecedented scale. We've had the usual suspects of low interest rates and quantitative easing. Quantitative easing now looks like old hat, but you have to remember that as recently as 2008, it was seen as wildly exotic. In the US, they've taken a further step and issued helicopter money. Helicopter money is essentially giving fresh cash to people to spend on what they want. So you print money and you give it away and say, spend that. And everybody's okay with that. The phrase helicopter money goes back to Milton Friedman, I think, who made the reference as a kind of a joke, like a thought experiment. You know, if all else failed, you could fly a helicopter over the States and push dollars out the door, and then as it fell, people would pick it up and spend it. Ben Bernanke subsequently revived the idea and actually almost sanitized it, and then it gradually got taken seriously, which perhaps is a measure of how mad fiscal monetary policy now is. I've noticed that actually the amount of money you get, it's not a huge amount, in fact, and it varies, but as I said there, a married couple with 2 kids would get around $3,500 to spend, so it's not going to change anybody's life. If you add up the amount of money in the bill and take away what's being given away to US citizens, something like 80% is left for pork barrel projects, so-called, which are senators' favourite projects to get their vote. It's called democracy over there, apparently. Anyway, the idea is to stimulate the economy by creating new demand, and $64,000 question is, will it work? And that's a really, really big question, okay? And everybody's got an opinion. Will we get inflation? Will we get deflation? And well, it's just difficult to answer. There are some deflationary forces at work, and some inflationary forces at work. The deflationary ones I've noted there are, the most obvious one is falling demand. My wife uses Mumsnet, which is as good a barometer of Middle England as I think you can possibly imagine. And it's quite noticeable there on one of the threads how many of the women on the thread were saying, well, actually, they've never saved so much money in their lives.
Nigel, sorry to interrupt. According to this, that was a fast block. We've got block 630,000 just been mined by Ampool.
We're there, are we?
Apparently so, according to blockchain.com block explorer. What's the countdown saying?
Well, the countdown says 1 minute and 47, so we're sort of lining up. So
yeah, that's yeah, no, it's pretty close. Yeah, they reckon it's just been mined.
Okay, well, I raise a glass to that.
I mean, I could click into the hash and see if they actually have got anything there. Bear with me 1 second. Yeah, there's a hash of it and transactions in it, so I'd say that's official.
Well, cheers,
Happy
everybody.
birthday, Bitcoin!
Cheers.
Cheers, everybody.
Well done.
Oh, that tastes good. 4 years till the next one.
I was just trying to explain it to my mother, and she said, "Wow," she said.
I mean,
That's really big.
Did she really? Well, that's fantastic. Right, for all the scare stories that are around, the one thing people never seem to worry about is the software will actually work and it will actually halve. That never seems to be questioned, but it's quite a remarkable fact that it sits there quietly and then of its own accord just halves the reward. So I think we can consider we're now in a new era. It'll be a very interesting 4 years ahead, everybody.
The fifth phase.
The fifth phase, indeed. And there are a lot of people talking about phases, which is perhaps something we can touch on.
Hey, wait, Nigel, just before you disappear, on that slide, on inflation versus deflation,
Yeah.
if we get deflation, does it mean that gold and Bitcoin price both collapse?
That's a very good question. Can I just hold on that? It's a good question.
Yeah.
My view is that inflation is generally better for Bitcoin than deflation.
Yes.
But because Bitcoin is potentially a classic inflation hedge.
But does it die with deflation? That's what I understand the former, but I don't know what happens if the reverse is true.
Well, I've got some further thoughts on this. It's not just this one slide. So perhaps if we just go through it and see if that deals with the question, and at that point perhaps we can throw it open for different views. But essentially, if I just get through these couple of slides on this topic, and we'll deal with it. Essentially, falling demand is deflationary. As I said, my wife's friends on Mumsnet, saving money rather than spending money. They talk about how they won't be having that skinny latte on the way to work because they're working from home, and therefore they're and actually some of them were really amazed how much money they've saved. I mean, really stunned how much money they've saved by just not frittering it, by not going out the door. So it's been quite an education. Savings rates in the US and in Europe have dramatically gone up. There's obviously a factor there that people are worried about job security. The oil price collapse has also tracked this. That's very deflation, although it's very much a response. As demand falls, the oil price falls. It doesn't help that we got a bloody great oil price war in the middle of it. But also the oil price falling is itself deflationary because the oil price is baked into a lot of goods that are taken to shops on trucks that are themselves powered by oil. So the oil price collapse contributes to the deflation as well as highlights it. On the other hand, we're printing lots of new money precisely to inflate the economy, to compensate for that. And there's also starting to be changes to supply chains for various reasons, some of which are pretty alarming, to do with changing supply chains. So we don't source things in China, but in the West. Probably some of that is likely to be inflationary because the West is likely to cost more than some sweatshop in China. In terms of what do we get? Well, I think it's fair to say most governments are more afraid of deflation than inflation. And the reason for that is certainly Western governments are generally very, very indebted. And deflation dries up the value of debts, whereas inflation reduces it. So for instance, if you owe me £100 and we have a deflation, in a year's time, £100 will buy more stuff than it does today, because that's what deflation means. Therefore, the value of your debt will have gone up. Well, the same applies to governments. So they're scared to death of deflation, and normally they try to get a little bit of inflation, and the Bank of England, for instance, targets a 2% inflation rate. A lot of inflation would make the government's debts get even smaller. So the governments have definitely got an incentive to create inflation. As I've said here, I expect deflation over the next 12 to 18 months, but inflation afterwards to inflate away that debt. The reason I expect deflation over the next year or so is simply because the demand destruction at play is so immense that it's hard to imagine anything compensating for it, because if people don't spend money, you can give them helicopter money all day long, but if all they do is whack it in their savings account because they're worried about losing their job, then that's still very, very deflationary. Another thought on deflation or inflation. We have been here before, and this has real echoes of 2008, where a similar deflation versus inflation debate happened when quantitative easing came along. And the deflationistas broadly won that one. We have seen a little inflation since, but generally there were people out there predicting massive inflation that just didn't happen. And indeed, some economies have slipped into deflation. Europe has struggled with deflation. Even the pound has slipped into negative territory at times, in spite of the fact it's collapsed against other currencies. It's still achieved some deflation at times. What this slide, though, is saying is actually the picture is more complicated than that. And I would argue we've actually had quite a lot of inflation as well, particularly in housing. And what we've seen is the creation of a twin track economy with deflation in the consumer economy and inflation in financial assets like stocks and housing. Okay, and the reason for that is that in the customer economy, we've got China and the internet both driving prices down. They're both extremely deflationary forces. China's created massive supply, and the internet is Adam Smith's idea of the perfect market, because you can always shop around on the internet and compare prices super easily, where you couldn't do that before. So those two deflationary forces have affected the consumer economy, but they don't. China can't help you get a cheaper house, and your house won't be on the internet. No, at least not in 2020. It might be one day, possibly. I don't know. But so essentially, we've seen inflation in the financial economy, and certainly as a parent, I've seen my adult children struggle to buy a home, even with joint incomes. We've got people in their 20s and even 30s still living at home. So we have. It's quite interesting that the government's two inflation rates that it uses, CPI and to a lesser extent RPI, neither of them take housing into account. And there's a reason for that, which is how housing is permanently going up. So personally, my answer to your question, Sue, would be, well, my prediction, such as I'm going to make one, is I think there's a real chance with massive inflation of the money supply, zero interest rates, probably we're going to get negative interest rates, they're trending that way, is that we could actually get a housing boom once we get past the initial deflationary period. That doesn't seem credible at the moment, I fully accept that, but if I can just take you back exactly 100 years to the last pandemic, which was a damn sight worse than this one, just straight after a world war, and then they had the Spanish flu, which killed by some accounts as many people as the entire First World War. They trashed their interest rates, they printed cash for fun, they had a depression, not a recession. The 1920 depression has been airbrushed out of history, but it was a full-on depression. But they printed so much money, it all came roaring back again, and they got a massive housing and stock market boom that we now refer to as the Roaring Twenties, and we think of the Great Gatsby and all of that flapper era. Where there was a huge asset price explosion, both in stocks and property. If you're interested in that topic, and indeed the whole history of America, particularly American booms and busts, you might want to read a book called The Secret Life of Real Estate by a brilliant economist called Phil Anderson. It tells the story of how land prices are very much drive booms and busts. And so it seems to be quite possible we could see a housing boom once we get past the deflationary period. Of course, a lot depends on how fast we come out of this. And that's depends on things like whether we get a vaccine. But that's certainly I believe we'll get inflation and then deflation. I haven't forgotten your question, Sue, I promise. Just a couple more points on this. Is the dollar in trouble? We're creating all this debt. Well, there's an interesting stat for you. Currently, the average American taxpayer owes $202,000. If you divide the US national debt by the number of taxpayers, you get $202,000, which is clearly not a figure that anybody could expect American taxpayers to pay back. At least I can't understand how you would. If you actually go to usdebtclock.org, it's immensely entertaining. You can actually watch the debt clock mounting up at speed. In fact, quite an astonishing speed. There are other world debt clocks and state debt clocks as well that are similarly eye-watering. It's a sobering read. The numbers at the bottom are interesting as well. The US federal debt to GDP is a good measure that takes inflation out of the picture. So it's saying how much has the country got versus the amount of money that economy makes. And interesting, the US has now got, so how much debt does it have versus the size of its economy? And the US debt is now greater than the size of the entire US economy. So that's twice as much as in the year 2000. So it's a historic leap in debt levels. Other Western countries are similarly indebted. If you look across Europe, it's a very similar picture. And you've also got problems with corporates as well, who've loaded up on debt, particularly in France in Europe. It's, I think, an unspoken problem, but you think Italy's in a mess, you want to look at French corporates. And yet here's the thing, the Fed can't print enough dollars. in spite of the fact that the US dollar is clearly a basket case, there has still been a global rush into the US dollar, driving extreme market moves. And in the middle of March, we had a full-on liquidity crisis that triggered the Bitcoin collapse of a real flash crash that was. Something like, it's about 30% in a day, but it affected every single asset class. Even US Treasury bonds, which are the safest asset class in the world, TM, experienced drastic moves. So the world still believes in the dollar, and they can't get enough of it. If you go to third world countries, you go to emerging markets, dollars are always in demand. So we've got this weird kind of it's like two liquids, light and heavy, that don't mix, right? So you've got the dollar going to hell in a handcart, and at the same time, people really believe in it. Can you imagine having a printing press in your back bedroom? You can print as much money as you like, and people will fall over themselves to buy it off you. Well, that's the state. That's the position the US is in. It's been called the exorbitant privilege of running the world's reserve currency. What does it all mean? Well, I'll come on to that. But in terms of your question, Sue, generally speaking, inflation hedges tend to be scarce currencies, or scarce quasi-currencies. Gold is the most obvious one. Silver has been a quasi-currency in the past as well. We'll talk about why when we talk about stock to flow. And Bitcoin is challenging that crown. Okay, in a deflationary environment, that case doesn't apply. So you could argue that a deflation is less appealing. Let's talk about gold, for instance. And yet, in fact, gold has tended to do quite well in a deflationary environment in the past. And the argument there goes that in a deflationary environment, what happens is yields fall. Yields on bonds fall drastically. In fact, in Japan and in Switzerland and in Denmark, yields have gone negative. If we end up in a deflationary environment, yields will go negative everywhere, including in the US, because yields are the coupon that the government pays to sell its bond, to sell its bonds, and they want to discourage people buying bonds in a deflationary environment, or they want to encourage people to spend. So they'll set those yields very, very low, and that therefore means there'll be no incentive to hold bonds. And what you'll end up with is a situation where there's no yields from anything. And in that situation, a non-yielding asset like Bitcoin actually doesn't look a bad option. If putting money in treasury bonds is costing you money because it's a negative yield, a 0% yielding asset is actually making you money, because by hanging on to your money, it's holding its value in a deflationary environment. So there is a case actually for Bitcoin and gold in a deflationary environment too. And I would position them myself as assets to hold in a crisis rather than when everything's fine. Nobody's interested in gold when everything's just fine. But there is a case to be made for them in both deflationary and inflationary environments. I'm aware, as I say that is an unusual view, that some people will think Bitcoin and gold are just about inflation. I don't believe that's the case. Okay, just finishing thoughts on COVID-19 before we move on, and we ask Chris to talk about wallets. What does it all mean? Where's the economy? Because really the challenge for COVID-19 is an economic challenge as far as Bitcoin is concerned. And Bitcoin exists within a real economic framework. One thing that we are sure of is it's going to be bad. How bad is the question? And I've been looking at all the different predictions from all the different economists, and basically they're either bad, very bad, or historically bad. And some of the really bad ones don't come from what I would call wild-eyed doomsayers. I mean, it's hard to call the Bank of England wild-eyed doomsayer, but they've predicted the crisis will push the UK economy into its deepest recession in 3 centuries. That's an extraordinary statement. You can read that article in the FT. They also predict quite a promising bounce back based on some improbable assumptions. They might be right, but I think they have to admit that their bounce back is fairly optimistic. If you say it's going to be the worst thing we've ever seen, but don't worry, it'll be fine, it's a strange message to be selling. I've summarised there some of the leading economists. You might recognise some of the names. Capital Economics seems quite in fact, a very bullish one, a very bearish one. JP Morgan is a bit more optimistic, but they're all shades of misery. Nobody thinks we're in, I mean, the Q2 by any measure is clearly going to be off the chart. But what a lot of these economists are betting on is that there will be a sudden bounce back. So you see things like capital economics are saying we'll have a 24% fall in GDP in the second quarter, which would be historically bad, but only a 12% fall, which is itself bloody awful, for the year as a whole. They're probably about the bleakest. They tend to be a fairly bearish bunch anyway, but you can see there it's not exactly a lot of cheer. So I think we've got to expect that this year is going to be very tough. That is a very deflationary outlook, certainly for the next 12 months. And it's hard to see how we get inflation in any terms over the next certainly 12 months. I would suggest. I threw this in. This is quite fun. There's a guy called Raoul Pal who is quite an interesting character. This guy produces a report called the Global Macro Investor that you can't normally get. It's produced for institutional investors and fund managers. He's an ex-Goldman Sachs hedge fund manager, Raoul Pal. He's certainly got a very strong track record, seems to be very well respected within fund managers, but he claims his latest report, he does a monthly report, he claims his latest one is the most important report he's ever written, and so he's giving it away. Well, if you read it, I suggest you read it on a sunny day when you're in a good mood. It's certainly the gloomiest forecast report I've ever read. I pasted in one chart there just for, well, humour value, really. That's a chart of the US initial jobless claims, so new jobless claims in the US since 1967, and you can see it goes up and down and so forth. And then you can see that sudden shoot up at the end. That is not a misprint. That is the situation since the crisis started. So clearly, the sudden increase in new jobless.
Can you move that over? Because it's hidden by the pictures of everybody.
Okay, I'm not sure.
That's to the right hand side of the chart.
I think you can move the pictures of everybody probably, but if I'm not sure I can. If I
yeah,
I just want the bar at the top, the black bar. If you can drag that.
I did it. I got it. Okay, I can see it now.
So it's an absolutely astonishing picture. This report is full of astonishing pictures. Interestingly, Raoul Pal is clearly not a Bitcoinista. Okay. And one of the things I have noticed is a lot of mainstream forecasters have suddenly shown a lot of interest in Bitcoin. This guy actually is recommending you hold 25% of your net worth in Bitcoin, which I wouldn't do, and 25% in gold. But I'm not saying he's wrong. I'm just saying I wouldn't do it. But he's an ex-Goldman Sachs hedge fund manager, and I'm not. So I'm not saying he's wrong. I'm just saying it's extreme view.
It's interesting to see. Sorry, Nigel.
It's all right.
It's interesting to see if he actually has done that, whether he's done that with his finances and rearranged things so he's in that situation, or whether he's just saying it. It's quite two different, very different.
Well, indeed. I can't check his bank account, but certainly that he's certainly got a reputation, and he's got to protect that presumably. So I assume he's not just doing it for fun. But I'm giving that as the most extreme example. But you can see essentially what we're in is an environment where a lot of people are making a lot of gloomy predictions. There are other, I could have included some names, but there are some other mainstream commentators and economists now taking Bitcoin a lot more seriously. But as I've said here, what does it all mean for Bitcoin? Well, there's certainly a wide range of opinion. Bitcoin's experienced high volatility this year, even by its own standards, though maybe when we come back to the results of Alex's quiz, we might revise that statement. Personally, I expect there to be a very volatile period ahead. I think I'm pretty much sure I'll be right about that. But overall, Bitcoin's doing okay. If I check the price now, just in sterling. So at the moment in sterling, Bitcoin price is £6,965. On the 1st of January, it was about £5,500. So we're up about 24% since the start of the year, which makes Bitcoin just about the best performing asset class of the year to date. So I've noticed some commentators are writing about Bitcoin has failed the challenge. Well, I'm not sure what they're all invested in. I'd like to know. But they're wrong. Bitcoin has done just fine so far. Gold has done fine as well, which suggests a degree of correlation. The big fall in the middle was the liquidity crisis that I mentioned, when people were selling everything just to get their hands on dollars. That was the panic phase. We now seem to be in a, I think we're past peak panic, but we're not past peak depression. Personally, I think there's a couple more legs down in the market. I can't understand how the US stock market can be only 15% beneath its bull market peak. That just strikes me as mad. And as I saw billionaire Howard Marks remark, does the world strike you as only 15% screwed up? So, you know, no, it doesn't. But here's my key point, okay? You need a safe haven, perhaps not the one in the picture. But the world's going a bit mad. Nobody knows what the hell's going on. It's very difficult to value anything. I think you should think of Bitcoin as insurance, and I think you should definitely see gold in the same category. It's okay to hold stocks and cash. I must say I'm holding very few stocks personally, but please consider holding a little Bitcoin and gold as well. I'm not suggesting you should bet the farm on it, but I cannot see why somebody wouldn't hold at least a few percent. When Bitcoin moves, nothing moves like Bitcoin. It's the fastest growing asset in financial history, bar none. Why you would not want to expose yourself to some of that asymmetric upside from a safe haven candidate at a time like this utterly eludes me. Bloomberg agrees in my positive conclusion. I put the link there to a report. Bloomberg's just written a report on Bitcoin. They say, this is a quote from them, "This year marks a key test for Bitcoin's transition towards a quasi-currency like gold, and we expect it to pass." It notes Bitcoin's shakeout in March, but says it expects it to prosper from here. And I've noticed similar things being said by mainstream forecasters, okay, mainstream economists. Nobody can say Bloomberg is a wild-eyed optimist. It's a very sober-sized report, and I urge you to read it. It was written last month. It can be downloaded free at that address. All of this I'm going to stick on YouTube, this recording, and I'm happy to circulate addresses to anybody that wants them. Okay, so you probably had enough of me for now. So I'd like to hand over the reins to Chris to talk about.
Can I ask a really quick question, Nigel? On gold, do you think that ETFs are risky because the underlying banks as custodians are going to go bust? Like HSBC is behind several of them.
I don't think the banks are going to go bust. I really don't. In fact, the banks are in quite good shape because this is not a housing crash. So the banks have spent the last few years rebuilding their reserves, not because they're responsible individuals, but because they had to do so. What's now happened, which is what always happens, is that a next crisis has come along, and the banks have then been told, oh, you can reduce your reserves. So they're now reducing the reserves so they can start lending again. And for the banks, it's actually not a bad story. I mean, they've been told they can lend to small business with 100% government underwriting. Well, it's not a bad business to be in. So no, I don't think the banks are going to go bust. That said, I do think it's absolutely fair to say that a gold ETF is not the same level, is a higher risk than gold. The argument for gold is in the absence of counterparty risk. If you've got crew grants under your bed, which probably isn't the best place to put crew grants, but if you've got crew grants under your bed, they are nobody else's liability. So physical gold is definitely a better bet than a gold ETF. But a gold ETF is better than nothing. The bigger risk I would see with a gold ETF is capital controls. We saw in Cyprus what happens when governments run out of cash. They steal their citizens' cash. And in the 1930s, FDR made holding gold illegal in the US. And so people had to hand in their gold, and he gave them the same value in US dollars, which was incredibly generous of him. But oddly enough, within just a few months, those US dollars were worth an awful lot less than the gold. Who'd have thought? So yeah, physical gold is definitely lower risk than a gold ETF, but I think a gold ETF has the value of simplicity for a lot of people, and I don't believe the banks are going to fail. I really, not this time. Maybe next time when they've lent loads of money out against housing, but right now they've seriously repaired their reserves. Because of things like Sarbanes-Oxley after the 2008 crash. But after this crash, you will never hear anybody talk about Lehman Brothers again. You know, it'll all be about, we've got to get back to lending, we've got to get back to throwing money at the economy and restarting everything. And 2008, the lessons of it will be forgotten, which is what always happens. We always forget. So that's my view on that. But okay. Chris, would you like to talk to us about the joys of wallets?
Yeah, I can certainly have a go. Let me see if I can get my screen to share. Bear with me 1 second.
Thanks.
So it should be that one. And then if we do that, hopefully you guys can see that.
Yeah.
Can you see that? Perfect. Excellent. So yeah, I'll tell you a little bit about myself first. Yeah, my name's Chris, as mentioned, based in Nottingham. I work as an electronics hardware engineer by trade. Got into crypto, I think probably, when was it? Middle of 2017. Once I discovered it, I got kind of a little bit obsessed with it, and it sort of, yeah, just took over, and I became more and more fascinated. So met someone else, another guy called Chris, in 2018 through crypto. Together we thought we'd try and do our bit to promote like crypto around the East Midlands. So together we set up East Midlands Crypto. Blatant shameless plug on here. So that's the website down there and our social media outlets if you want to check us out. But totally non-profit, not got any sponsors or anything. We just do it for the love of crypto, really. The group's idea was kind of to bring all the kind of little local groups like the Chesterfield group, you guys, the Sheffield group. There's been a few Nottingham meetups, just to kind of bring like them all together in sort of a central repository. So that was the idea of East Midlands Crypto. But anyway, so yeah, wallets. I'll make a start. So what is a wallet? Basically, a wallet is somewhere to keep your crypto securely. It's software that interacts with the blockchain. A lot of people kind of bit of a misconception a lot of people have. It doesn't really store your crypto. A lot, like I said, speak to a lot of new people who say, oh, I'm keeping my crypto in this wallet, and kind of think that the crypto lives in the wallet. It doesn't. It lives on the blockchain, obviously. The wallet is the way you access the crypto via the blockchain. So you'd use your wallet to, it contains your keys, you'd use your keys to sign a transaction. So, and then therefore move the crypto. What's the difference between wallets and exchanges? This is another one I hear a lot. A lot of people kind of, like I said, a lot of people, especially who are quite new to crypto, say, oh, they've got their crypto in, they mention an exchange wallet. I mean, I'll mention something else in a minute that can be quite confusing, but Coinbase, for example, that's more of an exchange app, or otherwise known as a custodial wallet. So basically meaning that you don't have your keys, the exchange does. So I guess you could consider an exchange like a bank account. So yeah, like I said, Coinbase, Binance, Qcoin, they all have apps which people have on the phone and go, oh, I've got this app, and you kind of think, well, that's not really an app. I mean, arguably a custodial app, but a custodial wallet, but it's not really a proper wallet. It's just a exchange app which is showing you how much money you have on that exchange. So yeah, like I said, I kind of wanted to put that slide in just to say, note the difference. Basically, there's sort of exchanges and there's wallets. To me, a wallet gives you full access to your keys. So if you've got a wallet with full access to your keys, you own the crypto. It's not effectively in a bank, if you like. So yeah, that's kind of another common misconception I think people have of confusing the two. So bit of a Bitcoin history lesson here. By the way, if anyone's got any questions, I've got the chat running, or just jump in and ask away, or if I make any mistakes, feel free to correct me. I'm certainly no expert. So bit of a history lesson. So yeah, back in 2008, 2009, when it all kicked off, the only way you could kind of interact with the blockchain was to run a node. So a full node was effectively kind of like, it mined, it was the node, and it was the wallet all on one piece of software. Then as the blockchain got a bit bigger, I mean, now we're up to about 250 gigabyte, obviously running a node kind of takes not a high-end computer, but it takes a bit more computer power, a bit more storage. It's not really that practical to run on a mobile phone just because of the size of it and also the data kind of throughput. So yeah, basically fairly early on, people kind of thought, well, we need some other solution to this. Full nodes kind of are great and obviously completely critical to support the network. I mean, if anyone wants to build a full node, I'd strongly encourage you to do it. You can do it on a Raspberry Pi, you can use a PC, you can do all sorts, but like I said, full nodes are still completely critical to the kind of running of the network. But for people using like Bitcoin on the phones and stuff, obviously a full node's kind of not ideal for that. So lightweight wallets were created. So lightweight wallets, let me just check on my notes what I scribbled down. So yeah, basically lightweight wallets are kind of, they interact with a full node, but they're not a full node. So when you download a lightweight wallet, some wallets will, if you kind of go into the settings and look at the back end stuff, some wallets will allow you to select a node you want to connect to. So if you knew, say if you ran a node or if your friend ran a node, you could select on that wallet that you want to use their node. You trust that node as being accurate and up to date. However, obviously lots of people don't get that into it and just download a wallet, and most of the wallet providers will just give you a default node, one they run, to interact with the blockchain. So full nodes are kind of great as a just dead easy. Anyone can download them. You can get them on PCs, phones. I've got a few more slides on that in a few minutes. But you don't need to store the entire blockchain. That's the key. It's kind of, it's lightweight because it needs very minimal kind of computing power, very minimal storage to interact. As time went on, I mean, initially they all used something called SPV, Simple Payment Verification, I think that's called. As time went on, there was improvements made to that. There was Bloom filters introduced and something called Neutrino. I'm not going to claim to be an expert on either of those. I've put a YouTube link in there if anyone wants a far more technical explanation. One of the guys in the Sheffield group, Jake, he did a really good talk on the kind of a lot more technical than I'm going to go into, but yeah, how lightweight wallets interact with the blockchain, and like I said, a lot more on Bloom filters and Neutrino. So basically, yeah, types of wallets, loads of different types of wallets, but I suppose the key thing to point out on this slide is we've got a difference between hot wallets and cold wallets. Hot wallets are wallets that basically are on a device that's connected to the internet, so less secure because the device is always connected to the internet. Convenient, but less secure, whereas cold wallets are a device that aren't on the internet, so kind of like, well, you can get hardware wallets or paper wallets, but some form of device that you're keeping kind of safe away from the internet so no one can access it. Yeah, I'll come on to that a bit more in a minute. So I've kind of done these in order of least secure up to, well, maybe most secure, depending on how you want to look at it. You'll see what I mean when I come to it. So web-based wallet, I'd say, is probably your least secure option. Web-based wallet is basically a wallet that does give you access to the private keys, but you're interacting with it over a web browser. So the key kind of takeaways from that one are it's being hosted by someone else. So although you've got the keys, someone else has also got the keys. I mean, they shouldn't have, and they won't go, they're not, you're probably going to be fine. But at the end of the day, if you want to be ultimately secure, whoever's hosting that wallet for you has also got the keys. So that's one to watch out for. Basically, like I said on the slide there, your keys aren't actually stored on the device itself. They're stored on a third-party server. Some of them are reasonable. I wouldn't ever recommend keeping much money on them, like I said, just because of the security issues, in my opinion. But definitely, if you are going to use them at all, I'd recommend doing your research. There's a lot of dodgy, scammy stuff around. Advantages are kind of, I suppose, if you're at your PC or if you even got a phone, they're convenient. They're very convenient, I suppose, because any kind of connected device, anything that's on the internet can interact with them, and you can move crypto from them. Another advantage, I guess, if you want to be kind of quite up on the privacy, you can use Tor or VPNs and connect to the wallet via a VPN and Tor to hide where you are. Disadvantages are, like I said, least secure. By far, I'd say the least secure option. I'd never personally keep much on them. So, sorry, did someone say something?
Yeah, it's me. I've been wanting to use a VPN to do crypto stuff over, but I'm terrified that whichever VPN I choose might in fact have some kind of monitoring bug in it itself.
Yeah, it's another one of kind. Sorry, go on.
Super safe.
Yeah, I mean, it's another one of my little interests. Kind of the whole privacy aspect of it is something that kind of fascinates me. I mean, personally, I use NordVPN. That was after just a lot of research and kind of recommendation. But like you said, the problem with a VPN is ultimately you are trusting a third party. So if they wanted to put a backdoor in it, they could. So yeah, there's pros and cons, I guess. The more secure option would be use Tor. Obviously, it's a bit more complicated and it's really, really painfully slow. It works, but it's painfully slow. So yeah, I suppose if you didn't want to trust a VPN provider, I'd say Tor's the way to go. Yeah, does that sort of answer the question?
But do you recommend Nord? Would you do your crypto? Would you do a large
Yeah,
transaction over Nord?
I personally do use Nord. Yeah, I mean, I do. Most of my crypto and stuff is stored on a hardware wallet, which I'll come to in a minute. So the idea there is the keys never actually leave the device. Like I said, I've got a whole slide on that to come in a minute. But yeah, I quite happily use Nord I pretty much route most of my internet traffic over Nord, to be honest. I've used them for probably 18 months now, never really had any issues. I mean, there was something on a lot of social media about a year ago, I think now. Basically, they did have a little bit of a privacy breach on one of their servers. It may have been Iceland. I can't remember exactly the details. You still find something on the internet. But yeah, they did get a bit of bad press for that. But I mean, it never affected me. And even the people who were routing traffic through that server, I think unless you were specifically targeted, the way the breach happened was you were basically fine unless it was a specific kind of attack at an individual user over that kind of server. So yeah, like I said, I use Nord a lot and yeah, never really had any issues. So yeah, I think if I was going to recommend a VPN, it'd be that one. But like I said, if you want ultimate privacy, I'd look at using Tor.
Thank you.
That's okay. So where was I up to on that one? Yeah, disadvantages. Like I said, least secure option because potentially someone else has your keys. Susceptible to like phishing attacks, scams, malware, DDoS attacks. I suppose, yeah, potentially if it was DDoS attacks, the server's not available, you can't get to your crypto. So yeah, there's several downsides to web-based wallets. So moving on, desktop wallets, a bit more secure. Another hot wallet option, but this is a piece of software you'd actually download to your computer. So yeah, you'd download it, you'd only have the private keys, nobody else would have the private keys. And yeah, it's just a piece of software or an app that sits there, runs on the background in your computer. I suppose they're generally fairly easy to use, quite convenient to use if you're at your PC. Not so great, however, if you want to use it kind of out and about. I mean, not that many shops accept crypto, but if you did go into a shop and wanted to pay with some in crypto one day in the future, maybe, obviously you're not really going to want to pull your laptop out, fire it up and make a transaction. So for that reason, I suppose they're not as convenient. Lots of risk, I suppose, around viruses, malware. Basically, if the computer's compromised in any way, you're at big risk of the malware specifically targeting desktop wallets. So if you're going to use desktop wallets, I'd also make sure you run some decent antivirus protection. I mean, to be fair, the latest Windows sort of Defender is pretty good even by default. So yeah, just do regular scans on your PC, I'd say, if you are going to use a desktop wallet. Other disadvantages, obviously the computer could be stolen or break, but if you've backed your keys up, it's not a problem. You could just restore the wallet to another one. Again, I'll talk a bit more about backing your keys up shortly. So moving on, mobile wallets. Again, I'd say a step up in the security kind of things from PCs. Phones, I think nowadays I personally would say phones are arguably more secure than PCs. I think people may argue with me on that one, but that's my opinion. Like I mentioned down in the advantages, a lot of the kind of high-end mobile phones have a separate secure element as like storage, so you could potentially move the crypto app onto the secure elements of the storage and run it through there. Other advantages, really easy to use. There's loads of different ones to choose from. Convenient to use on the go. I think I mentioned that already. Disadvantages are, I suppose, potential of losing funds if your phone was stolen. If you do use a mobile phone wallet, something I would definitely say is set a password. I've got a couple of mobile phone wallets running on my phone. I don't store much in them, but just kind of, if I do go to crypto meetups or whatever, and you want to move money to one person to somebody else, yeah, I never kind of store more than, I don't know, 20-30 pounds worth of crypto on them. But yeah, I personally use an app called Coinomi Wallet. I think that's really good, quite user friendly. And also Engine Wallet would be my recommendations of mobile phone apps. I personally think they're brilliant. Engine Wallet's also really, really easy to use. Yeah, my point about passwords, definitely password protect them, because if someone did steal your phone, obviously they could just move the funds if you don't have a password. If you've got a password on there, it buys you some time to back up the wallet to another device and then move the crypto to safety. So at least you've only lost your phone and not your crypto as well. What else have we got on there? Oh yeah, same as PC apps. I'd say if you're going to download them, do your research, kind of go on. If you use Android, Google Play, or if you use Apple iOS Store, and just look at reviews. I think there's a lot of dodgy, sort of scammy, illegitimate apps out there that would quite happily steal your money the second you put it onto it. But yeah, if you use ones with decent reviews and only download them from main app stores, I think generally you'll be all right. So moving on, hardware wallets, as mentioned earlier, that's kind of my personal choice for maximum security. I think hardware wallets are a great compromise between security and actually being able to sort of practically use it. I'll go on to paper wallets in a minute, which again, if you do them right, are super secure, but an absolute nightmare. So the idea of a hardware wallet, I should have really got mine. I could have showed you it all, but anyway, it's hidden away, so I'm not. But yeah, I personally use the Ledger Nano S. Oh, that's worth mentioning. I noticed as well for the halving, if Ledger have also got a 50% off sale at the moment. They had a discount code, which I was going to tell you, in case anyone wanted to buy one in time in the next 2 days. It was
Ledger Nano.
Ledger, Ledger, the actual retailer, on their website. So the Ledger Nanos, they make a couple more wallets, I think. But yeah, if you go on their website, you can enter a discount code of "We Are the Bull Run," all capital letters, and it gives you 50% off. I was almost tempted to buy another, but didn't. So that's one thing I would say, though. If you are going to buy a hardware wallet, definitely don't buy a second-hand one, and only buy it from Ledger or from the kind of manufacturer. I mean, Trezor, that's another really kind of reputable brand. Keep Key, I think, is another one I've heard people mention, which I think are, again, pretty good.
A company I know has just announced that Trezor's got a backdoor on
Really?
overflow. They just found it.
Wow.
Which I'm in. The founder
That's
that
interesting.
they were trying to integrate Trezor, and they said they just found an overflow which they're correcting, but Trezor doesn't know about yet.
Wow, that's bad publicity for Trezor, isn't it? Yeah, interesting news. I wasn't aware of that. Okay, retract that previous statement. Probably don't get a Trezor. So, yeah, but like I said, I think the Ledger, like I said, I use the Nano S. That's a great little hardware wallet. I think I've used that for probably about a year or so now. And yeah, never had any problems. Key point to note is make sure you back up the keys. So, or the phrase. I mean, that's something I could have mentioned earlier, actually. Most modern wallets are HD wallets. What's that stand for? Hierarchy. Hang on, I did have it wrote down, and I could tell you what it stands for. Bear with me. Hierarchical deterministic wallets, that's what it stands for, which basically means rather than giving you the private key, they give you a mnemonic, I can't even say that, mnemonic phrase, which is usually either 12, 18 or 24 words. Obviously far easier to write down without making a mistake than a ridiculously long private key. So yeah, pretty much all wallets you'd download and sort of interact with nowadays are HD wallets. So expect to get a phrase rather than the actual private key itself. I mean, you can get the private key should you want to, but the phrase is derived from that, so it's the same thing effectively. But yeah, key point on any of the wallets you're going to use, make sure you write that phrase down, because if you do lose the wallet or the wallet breaks or gets damaged or anything else, that's your kind of key to recovering your crypto. So yeah, I can't really emphasize that enough. Don't lose that, and make sure it's well hidden away, because obviously if someone else has access to that, they've also got access to your crypto. So yeah, back to hardware wallets. Yeah, like usually either like a little USB stick. Some of them are a bit bigger, credit card size maybe. Usually plug in on over USB. Key point to note is that the private key never leaves the device, so that's why they're so secure. So you could actually plug that into a hugely compromised computer with every piece of virus and malware going. And really, in theory, you shouldn't be at any harm because the virus or malware couldn't have any access to the private keys on the hardware wallet. So when you make a transaction with a hardware wallet, you basically set the transaction up on the device and then you tell it, I want to send X amount of Bitcoin to X address. Then you plug in the hardware wallet and the hardware wallet will be used to sign the transaction. So it'd sign the transaction without actually exposing the keys. It'd just confirm that you are the kind of holder of the keys and go ahead and make this transaction. So that's basically the idea behind a hardware wallet, is that the keys never leave the device and they aren't ever exposed to the internet. One thing I would mention is if you were to plug it into a heavily compromised computer, I suppose potentially, this is going an extreme, is the virus or malware running on the computer could change the send to address. So another thing I'd say, a lot of hardware wallets now also have a display on that say which address you're going to send to. So check the address you're sending to on the screen is the address the hardware wallet says you're sending to. And if it's not, don't send it. That's the only way really I kind of guess you could be sort of compromised or at risk when using a hardware wallet, is if a piece of virus changed send to address, if that makes sense. Yeah, and like mentioned earlier, again, I'm quite happy to use that over a VPN or anyhow really, because the keys are safe within it. So other advantages to hardware wallets: nice and small. You can easily keep them in a safe or a vault or locked away, hidden in a bean tin in your cupboard, or that's not where mine is, by the way. But yeah, you can also set a PIN code on them. In fact, I think most almost make it compulsory to set a PIN code on them. So if the hardware wallet was stolen, when they find your fake bean tin in the cupboard, you still can't really do anything with it. So the thief could plug it in and try and make a transaction, but unless they know the PIN, they wouldn't be able to. And most of them, after you put the PIN in wrong like 3 times, will wipe the device anyway. So then it's useless. It's effectively a new hardware wallet that they can just generate a new private key and start again from, which isn't going to give them any access to your funds. Disadvantages: obviously you need to pay to buy one. They're not that cheap now. I noticed on the chat someone sent the link to Ledger Shop. 36 quid. That's good. Thanks, Alex. So yeah, they're coming down in price a lot. I think when I bought mine, it was about 80 or 90 quid. The Legend Nano X is the latest one, I think, which has got more storage, more memory on it, and Bluetooth and a few other quirky gadgets. Other disadvantages: oh yeah, that's I suppose a disadvantage to some of the old ones. The memory on them isn't great. So some of the older ones, like the Nano S, you can only hold kind of maybe 3 or 4 possibly different sort of cryptocurrencies. So I think I've got Ethereum, Bitcoin, and a couple of others on mine, and it's pretty much fills the memory. Of course, you can, however, remove the apps, put a new one on, interact with that blockchain, remove the app, put the other one back on. So there are ways around it, but it's faffy and inconvenient. What else have we got there? That's about it, really, I think. Sorry, go on, Nigel.
The time, we've got 30 minutes. I want to wrap up the meeting.
Oh, okay, cool.
Yeah.
I'll speed up a bit. Sorry. So yeah, onto paper wallets. So basically, a paper wallet is just a paper version of your public and private key pair. Key thing to take away on this one, like I said, I'll whiz through it, have a read of the slide, and if anyone wants me to send this, I'll send it later. Key thing to take away is when most people make a paper wallet, if you're doing it for the purpose of being majorly secure, don't do it on a kind of computer that's on the internet, because you've completely defeated the object. So if you're going to create a paper wallet, the machine needs to be offline. That's, I think, my key point to take away on that one. This one I wasn't sure whether to put in or not, but I'll whiz through it quickly. Something else well, not everyone's heard of, a brain wallet. Fascinating concept, but it's basically almost making a wallet in reverse. So the idea with this is you take a password or a passphrase that you already know, and you generate a private key from that. Kind of like I said in big letters down at the bottom of that slide, I personally wouldn't recommend it, because if you're going to use a tool like I've put brainwallet.org, that will do the job for you, but then you've told brainwallet.org what your private key is, and obviously they can do what they want with that. You can do it manually, but again, I think there's massive risks of human error because of the maths involved with doing it. There are YouTube videos explaining how you do it, but the maths gets pretty deep. So good luck if you want to try it. And like I said, I can't really think why you'd want to do it. The only reason I could think of is if you're possibly escaping a war zone and passing through checkpoints that you're going to get robbed out or something, then maybe that's your only reason. But other than that, I just wouldn't even go there. It's an interesting concept and possibly worth playing with, but yeah, I'd strongly advise avoiding that one. So just a quick summary, I'll whiz through that. Keep your keys safe. Whatever you do, make sure you back up the mnemonic phrase and keep it safe. I put a couple of other things on there, just I won't go into in any detail. Multi-sig wallets, basically you need more than one key to sign it. Time locks, you can add time locks to it as a piece of security. So basically it is locked until the code won't let it be released until whatever X date in the future. And then I mentioned coin joins for additional privacy. Some wallets will let you basically scramble inputs and outputs with other people's, so no one can track where it came from. If you're going to do that, some exchanges don't like it, by the way. Sorry, my last few slides were a bit rushed there, but that's about the end. So anyone got any questions?
Quick one from me. If you've got an IoT device that has been programmed with the intention of sniffing for other devices on the Wi-Fi and to get as much information as it could, and if it had clever data analytics, what is the worst that it can? What can it get at in terms of you interacting, say, with an exchange like Coinbase or whatever, or is it below that level?
I don't think they could find really any more information other than you are interacting with an exchange. So they'd be able to see, I guess, the website you were potentially using. But don't take me for 100% gospel on this, but I can't think of any possible way that it could get access to your keys. So no, I think as far as it's going to know is where you're sort of looking on the internet, what exchanges or what kind of
so
other
tell the
IPs you're
website,
interacting with.
but it can't see what you're transmitting to the website.
I can't think of any reason how it could, any kind of way it could. I mean, like I said, don't take that as 100% gospel, but I'm pretty confident that no, it couldn't. Not in your keys and stuff. It'd just see packets of data, but the packets of data would all be encrypted. So yeah, there's no way it could access your keys.
Okay, thanks.
Quick question from me, and I may have got the wrong end of the stick, but a paper wallet, if it's stored in your safe and your house burns down, you've lost it, and presumably is that the same true of a hardware wallet?
Well, no, a hardware wallet, a hardware wallet, I suppose in a way you'd almost combine a paper wallet with. So when you buy a hardware wallet, it will give you the mnemonic phrase, the 18 words. Basically, I suppose that's effectively creating a paper wallet backup, if you like. So those 18 words are your private key. So if you have a hardware wallet and your house burns down or the hardware wallet breaks, or your dog eats it or any of the other possible scenarios, then from the 18 words, you could then just buy another one, go into the backup mode and basically put that 18 words in there and it'd restore it to be yours again. So a paper wallet, I suppose you don't really have a backup because that is your backup effectively, if that makes sense. So the paper wallet would just be the private and public key pair. So if you lost that, it's gone, because unless you printed 2 copies of it off, I suppose that'd be your backup, making more than 1 copy. But then I suppose you risk, the more copies you've got strewn around, the more chance you are of being careless and someone finding one. So I suppose it's just what works for you kind of thing.
Okay, thank you.
And for the hardware wallet, there's a big temptation, lots of people do it, they keep the paper backup with the hardware wallet. So if your house
really
does burn down,
idea.
you lose both. So preferably keep your paper backup off-site.
Yeah, I totally agree. That's a really good point.
Yeah, fire safes are good as well.
Yeah.
Okay, I'm just conscious of time, so I'm going to push on. Thanks for that, Chris. It was really interesting.
That's okay. Like I said, I put a few resources on there and for you for further reading. If anyone wants a copy of this slideshow, just let me know and I'll send you one over. So yeah, cool. That's me done. Thanks, Nigel.
Okay, cheers. That's really good. I'm going to rattle through these last slides, and then we'll mark the quiz. But I'm going to get through these really quick. But if there's anything you don't understand with it, then feel free to come back to me separately. I just want to talk about this stock to flow concept. Some of you may be familiar with it, but I want to give a view on it, and what it is. It's become very fashionable in the industry. What is stock to flow? It's basically a valuation metric for Bitcoin. You know, one of the oldest problems that people come across with Bitcoin is, well, how much should that be worth, really? You know, it's not like valuing a stock where you can say, what profit did that company make? Valuing Bitcoin is more difficult. But a Lebanese Austrian school economist called Safdien Ammous, in the book The Bitcoin Standard, which if you haven't read, you should, proposes stock to flow as a valuation method, and indeed not just for Bitcoin, but for all sorts, for gold, potentially for housing, for almost any asset. Stock to flow is a way of mathematically defining how scarce something is. So stock to flow is a mathematical version of scarcity. If something's already deemed to be desirable, making it more scarce is likely to increase its desirability. Of course, if something isn't desirable in the first place, it can be scarce and have no value. So scarcity isn't a guarantee of value, but if we assume desire already exists, then scarcity should increase that desirability. I wanted to explain the concept, then I came across a video that did it in 1 minute, so I'm going to see if I can actually play this. I'm just wondering.
Let's assume a very rare metal.
Can you see this? Can you see this, everybody? Yeah? Yeah. I'm assuming you can see this. Nobody's saying different. Yes. If I play this video,
Yes.
Right, okay. I'm going to just try. It doesn't seem to play it in slideshow mode, so.
Let's assume a very rare metal was discovered 100 years ago, and people have decided to invest in it because it is scarce. The metal in question is never consumed, it's simply kept for investment purposes. We'll say 100,000 units currently exist, and that at this point, 1,000 units are mined into existence each year. As explained in another video, we call the 100,000 units that currently exist stocks, and the 1,000 units that are mined each year flows. As the name suggests, we obtain the stock-to-flow ratio of that metal by dividing the number of units in existence, so stocks, by the total number of units mined annually, so by the flows. In other words, 100,000 divided by 1,000, which is 100. The higher the stock-to-flow ratio is, the better investors feel, because people like the idea of owning something scarce, something that cannot simply be willed into existence easily. What if, all of a sudden, a technological breakthrough makes it possible to mine 10,000 units yearly instead of just 1,000? In that case, investors won't be happy because the ratio of 10 makes it clear that the scarcity selling point is no longer as attractive. Is the stock-to-flow ratio a popular metric? Well, for precious metals, yes. For cryptocurrencies, once again, yes. For other assets, less so, but still, it's worth including in your arsenal.
Okay, hopefully that made some sort of sense. I say it's a concept that might take a while just to get your head around. Another way of looking at it, if you think about it in terms of standard commodities like oil, I draw on this picture here showing that we go round and round with oil, so that the total stock of oil in the world divided by the oil that we've drilled for, say, in a given year, that's the stock to flow of oil. So if we start here, as the oil price goes up, that inevitably encourages drilling companies to drill more of it so they can make more money. So they will perhaps hire extra drilling rigs and extra staff. There'll be a big panic. Quick, drill more oil because it's rising in price. However, the very act of drilling more brings more oil to market, which lowers the stock to flow because the flow has gone up, and that will cause the price to fall. It's less scarce, there's more of it, supply and demand economics kick in, so the price falls. Eventually it falls so far that it becomes uneconomical for some drillers. They go, well, you know, shale oil drillers, for instance, only make money when the oil price is high. So they will, when it becomes cheap oil, they'll say, oh, sod that, we're not going to do this anymore. So they mothball all their mining process. That reduces supply and increases stock to flow. By increasing stock to flow, eventually, because less supply same amount of demand, the price rises again, and we go round and round and round. So the classic commodity price cycle is driven by stock to flow. Monetary metals are different from things like oil, though, and that's the point I want to make here. Good monetary metals like gold have a high stock to flow. So even if somebody says, quick, mine lots more gold, the extra gold they bring in still makes very little difference to the stock to flow, because there's so much above ground gold relative to the small amount that's mined that it still remains in demand. With Bitcoin, it's even more extreme. That cycle doesn't work. If I go back to the cycle, as the price rose, we saw that there was a desire to mine more of it. But Bitcoin has an algorithm that corrects, that ensures that the mining speed can't go up. You still get one block every 10 minutes, even if more people start to mine. So that we get this fixed curve of new Bitcoin coming to market. The fact there is no supply side response explains why Bitcoin has these FOMO panics, fear of missing out. Because what happens is somebody somewhere goes, all right, the price is going up, mine more, it has no effect, and so the price keeps going up, and more people realize and more people pile in. This self-regulating effect of going round the cycle and it bringing the price back down again can't happen if there is no supply side response. And that is why Bitcoin goes through a series of bubbles. When the Bitcoin price rises, it says here, it can become an unstoppable force. It's an amazing thing to behold. You do not want to be short in Bitcoin on a bull run. The stock to flow of Bitcoin has doubled tonight. It's a remarkable fact that we've just seen it double as we've been talking. 2017, Bitcoin had a stock to flow of 25. Gold is around 60. Now Bitcoin's stock to flow is around 50, but it'll actually creep up to around 60 by 2022, and by 2025 it'll become the hardest money the world's ever seen, with a stock to flow of around 100. On the left, I'm projecting forward from the Bitcoin standard the amount of new Bitcoin coming to market over the next 25 years versus the pound, the dollar, and so on, and that's a projection in the Bitcoin standard based on various assumptions based extrapolating the past forward. But Bitcoin is clearly not just rare, but going to get a hell of a lot rarer. In 2150, its stock to flow will be infinite because there'll be no new Bitcoin mined. So scarcity is very much a key idea in Bitcoin, and the stock to flow is a way of measuring it. What that leads to is various people out there trying to say, well, what would that mean for the price? Will the halvening, which is a radical upshift in stock to flow, cause trigger a bear market? Well, your guess is as good as mine to a certain extent, but there are also people out there prepared to have a go at that. Pantera, who are a bunch of people I actually really rate, are talking about a stock to the increased stock to flow actually leading to a price of around $100,000. The anonymous quant who goes under the name of Plan B has produced an extraordinary number of graphs and maths that I don't understand and don't pretend to, but his model shows how Bitcoin's growth path lines up with that of gold. And he's also identified different use cases for Bitcoin over the years. You can see those different clusters. He's effectively arguing that Bitcoin has evolved over time. As it evolves, its price profile evolves with it. His model, which is using regression analysis, extrapolates to a Bitcoin price of $288,000 over the next 4 years. What we can say is that the last two halvenings were followed by explosions in the Bitcoin price. Notice this is not an overnight effect, because right now, although Bitcoin's price, we're at the right-hand end of that, where the line between 2020 and 2021, that's where we are. Right now, the amount of Bitcoin circulation is pretty much the same as what it was yesterday. But each day, half as much Bitcoin is coming to market, but it takes a lot of days before that makes a real difference. which explains why the market doesn't take off straight away after a halvening. It takes a little while, typically 6 months, before the FOMO effect I talked about starts to kick in. But when it kicks in, well, certainly the last 2 times, after the first halvening, the market rose about 9,000%, and after the second one, about 2,900%. Can we trust stock to vote as a metric? Well, we've had 2 halvenings so far, and I can't really say that 2 events is a large sample. There is also the argument that the efficient market hypothesis argues that this cannot possibly work. And given that the Bitcoin growth production profile is in the public domain, everybody can look at those graphs and see that the amount of new Bitcoin is going to fall off exponentially over time. Therefore, shouldn't that already be priced in? However, you could have said that the last 2 halvenings. You certainly could even have said it in 2010 when it was all known. And if you had, you'd have missed out on the fastest growing asset in financial history. In my opinion, the current price reflects the risks as well as the possible target price. And there are risks with Bitcoin that discount that eventual target price. So those are my views on stock to flow. I think it's challenging. I wouldn't tie myself to those numbers. I do think Pantera are a very interesting bunch of people, and I think you should have a look at what they've got. And I certainly think a 6-figure target price is plausible.
Nigel, quick question. The Pantera 100,000, is that the average between now and 2024 or their peak?
That's what they're saying. The peak value, the fair value should be. They're not saying it won't overshoot that, so it's the wrong one. They weren't saying it overshoot that, but that's what they say fair value would be.
When Plan B forecasts 288, they're forecasting that as the average between now and 2024.
No, he's just saying it will reach that. That's his assessment of fair value at peak between 20 and 2024. He's also saying Plan B, he actually thinks it could overshoot that quite significantly. For instance, it overshot in 2016 by about 3 times.
That's why I was asking whether Pantera was similar.
Well, Pantera uses a completely different methodology, but both have this idea of fair value that can go underneath. I'm going the wrong way. That could go underneath, so it could overshoot their assessment. Interestingly, Pantera make the point that the 9,000% growth in 2013, obviously it's a lot bigger than 2,900%, though 2,900% would be very nice. But the point is, the reason they say it was so much higher the first time is because that was a bigger step down. From 50 to 25 is clearly a bigger reduction. Although in percentage terms it's a 50% reduction, it's 25 fewer coins. From 25 to 12.5 is only 12.5 fewer coins. This time it's only 6.25 fewer coins. So we would expect if Pantera are right, we wouldn't expect the growth to be 2,900%, but maybe 1,000%. And that's how they get from where we are now to the figure they're talking about. Okay, so they would expect each halvening to have a reduced effect, just like the second one was significantly reduced on the first. So on that basis, the greatest opportunity in Bitcoin's history was actually the first halvening. The second greatest was the second one, and this will be the third greatest. Okay, so I'm going to wrap up there, unless there are any further questions. Thanks for your patience. Alex, would you like to mark our cards, please, and see who got what?
Okay, then. So if everyone just gets their sheets just ready, and then what we'll do is everyone just totals them up at the end, just we can do it, and then whoever wins the socks, and I'll send them to you. I'm just hoping it's someone in Sheffield because I can just drive it around the corner, but I'm messing.
I'm really hoping Andy wins in Magdeburg. I think that would be great.
It would be awesome. Done some serious mileage. Okay, right, I'll get my screen. Pardon me. One sec. All right. Okay, sorry about this. If I can just figure this out. Right, so is everyone ready? Hopefully. Can you see my screen?
It says you started, but it hasn't shared it yet.
So slow.
I think it's just been a bit laggy, I think.
Sorry.
Yeah, we're there.
Okay, let's do this then. So, Okay, so question 1, the answer is 210,000.
No, 210,000.
Sorry, I'm sorry, I've had a long day.
It's been a long
210,000. Sorry.
Yeah.
Can you see my screen? Does it tell you the answer?
Yes, we can
Okay.
now. Yeah.
Might have to revert to that. Okay. The next one then, which day to celebrate is the sorry, I can't see it. I can't really see my own screen. Give me one sec. Let me just move this to the side. It's doing the same thing what what's happening on Susan's screen. Okay, cool. So which day is celebrated as Bitcoin Pizza Day? Is the 22nd of May.
Yay. Sorry, cheering. Is that right?
And question 2B is how much was paid for the pizza? Any guesses? No, I'll just tell you.
10,000.
10,000.
10,000. Well done.
10,000.
And yeah, anyway. Yeah. I'll post this on there, but the story's pretty cool. This guy came out and said, I'll pay 10,000 Bitcoin for a couple of pizzas. He says, like maybe 2 large ones, so I have some left over for the next day. Anyway, this British guy came and I don't know how he did it. I don't know if he just picked up the phone and ordered it. I'm in the US, but he ordered the pizza and he got the 10,000 Bitcoin. Pretty cool. Okay, so in which year was Bitcoin Genesis? Block mined. It was 2009.
Yeah.
Yep. So that's question 3. Question 4A is, what is the smallest unit of Bitcoin called? So most people refer to that as a Satoshi or 1 Satoshi. Is my screen changing? Are we on 4A?
Yeah. Yeah.
Satoshi. Okay. And then 4B is 1 Bitcoin has how many decimal places? The answer is 8. Okay.
Yeah.
Okay. Question 5. What is the maximum number of Bitcoins available for mining? This is 21 million. So again, if you don't know any of this stuff, it's all really good. Okay, Bitcoin's block reward. So this is question 6. Bitcoin's block reward will become 6.25 today after halving. What was the original reward amount? It was 50. That was question 6.
Yeah.
Okay, question 7. So what was the original exchange value to dollar on the first exchange? It was D 0.003 per Bitcoin. So I've just got a little fact here. So basically, one sec. It's in the way, do you know, the little camera. I can't see it. So basically, little fact. Oh, can't get out of the way. Anyway, basically, that's the equivalent of. So it was BitcoinMarket.com, which launched in March 2010, when it was around 0.003. So that's 330 Bitcoin to the dollar.
Good God.
Crazy. That's madness. Okay, question 8. In which year was Bitcoin had the largest relative growth? And it was 2013. In January 2013, Bitcoin was $13. By January 2014, it was 747. So it was 55 times higher. I always think it's 2017, but that was actually only a 15-fold increase in 17. So. Okay, question 9. What was the height?
Insane, wasn't it? It really was insane.
Yeah.
Yeah.
So, question 9. What was the highest Bitcoin's ever been to the dollar? It was $20,000. Just shy of it. Just less, depending on which exchange you look at. Okay. Question 10. Bitcoin has suffered many losses due to security breaches. What was basically the largest hack that Bitcoin's ever had? And it was C, the Mt. Gox collapse.
Yeah.
And I've got a good stat for you. Flip. Oh, no, I can move it now. Yes. The camera just gets in the way. So annoying. Here we go. So yeah, February 2014, Mt. Gox stated that almost 750 of its customers' Bitcoins, as well as 100,000 of its own Bitcoins, had been stolen. The total loss constituted around 7% of all Bitcoins available at the time. And it was worth 473 million. So that's absolutely epic stat. 7%, unbelievable. That's quite a hack. Quite the hack. Okay, so question 11. Which year was the least volatile, so the most boringest year? It was 2016.
Yeah.
It hardly moved at all. So question 12. The sharpest fall in Bitcoin history was 94%. Which year? The year was 2011. Basically, you saw Bitcoin go from $32 to $2, which doesn't seem like much, but percentage-wise, it's still 94%. Okay, 3. Question 13. Okay, which one is not real? Is e-silver. So BitGold and BitMoney were real projects, which both came out in '98, and they're considered to be precursors to Bitcoin. Is my screen working okay?
Yeah, it's fine.
Right?
Yeah.
Brilliant. Question 14 is CryptoKitties. Is the first game on Ethereum.
Oh, I didn't know.
Yeah. That's what I thought. I thought surely there's got to be more before that, but it'll make sense in a minute when we find out when Ethereum came out. Okay, question 15. What's the token used on Ethereum? It's the AERC20. A lot of exchanges use that to manage all cryptos. Okay, so question 16. Monero mining algorithm is called Kryptonite.
Yeah.
Oh, yeah. If there's any miners out there, I might be the only miner, I don't know. Okay, question 17. Place in order of age. Okay, let me just click this. Yeah, so Litecoin, 2011, Dash. You don't have to say the date, but this is the order. Litecoin, Dash, Ethereum. So yeah, it's crazy. I keep thinking Ethereum's been there forever, but no, 5 years.
The project started in 2014. Did they actually lock the code in the coins in 2015? Is that what happened?
You're right. I mean, obviously classic, and before they branched off, I guess it was going quite a while before. Yeah. I guess this must be when it forked.
Yeah, I'm going to say I'm sure it was 2014 when the Ethereum originally started.
That would make sense, definitely. I'm currently mining Ethereum Classic as we speak, so I'm a big fan. Okay. Oh yeah. All right. Question 18. Okay, the tickers. Okay, if I could click it, yeah. XLM is Stellar. Yeah. Zen is Horizon. It used to be called Zencash, so that's where the Zen comes from. And XVG is Verge.
Are they a point each, or?
Yeah, that's a good point. Yeah, just do them all as a point each. I think that's a really good point.
Yeah.
So even with these, you can give it a point each. That's cool.
Yeah.
It might not be the right order. So everything just has 1 point. Yeah, thanks for that. This is the first time I've ever done a quiz, so. Yeah. Okay. So the last one then, my favourite round. How old is John McAfee? He is 74.
Is he?
So he does look pretty rough, but he's doing pretty good to say that he does drugs and drink every single day. Hopefully I look that good at that age. So 74. He's still alive. Question 20.
When he said he was on Twitter, it made it more obvious he was still alive.
I gave that away.
Yeah.
That's a good point. Love it. Okay, which performer was the first to start accepting cryptocurrency for their records? And the answer is 50 Cent. B.
Yeah, Radiohead famously did, didn't they? And
yeah, that's why I threw it in there. I know they've got sort of like leanings toward crypto, but yeah, it was in 2014. He said that this decision of basically adding it so you could buy it in crypto reportedly resulted in $7 million of additional profit. So I thought that was quite cool.
Yeah.
All right, then. So what are these names? I always pronounce Nick's surname wrong, so I'm so okay, these are the names. So Nick Szabo, I guess that's how you pronounce it.
No, you spell it. It's S-Z-A-B-O. So you spell it.
Have I spelled it wrong?
Yeah, you have. Yeah, it's S-Z-A-B-O. Yeah.
Oh, I got the wrong way around. I was too concerned on remembering how to pronounce it. Roger Ver, who obviously he is the CEO or leader of Bitcoin Cash. Gavin Anderson, actually one of the developers of Bitcoin currently as well, and the Winkle brothers. The legends.
I put the first one down as Ricky Hatton.
He does look a bit like him. Yeah,
that's brilliant. Yeah, it does definitely look like him. When Ricky's thin, he's got the same look. Okay, question 22 is which crypto CEO paid 4.5 million to have lunch with Warren Buffett? He didn't actually convince him to buy any Bitcoin, but I think he actually gave him some at the lunch, and it was Justin Sun, who is, I guess, is CEO of Tron, isn't it? I think.
All right. Okay.
Tron, yeah, he's really famous. Everyone's ragging him on Twitter because he's always doing stupid things, but anyway, yeah. So that's Justin Sun. Okay. All right. This quote. Who said this? I remember. I went through it before. So who said this? It was
Craig Wright.
Craig Wright, the legend, the maverick. I love him. Love to hate him.
For those people who don't know, Craig Wright is famously claimed to be Satoshi. He said some really dumb things that strongly suggest he really wasn't Satoshi, and he doesn't care. He just plows on regardless. The man he's become a bit of a legend as being so dastardly. He's kind of like he's kind of the evil figure we all love to hate. In case you're wondering who he is.
Yeah. And several people are trying to sue him for Bitcoin. He was in jail. He was in court all of last year as well, with some hilarious stuff going on, and the judge telling him to shut up or he's going to put him in cuffs during the court case. Really funny. Okay, so the last one then is, this is Satoshi Nakamoto, or who we thought we'd found him. What's his first name? His first name is
Dorian.
Yeah, Dorian. That's pretty cool. He even said, if you look closely, I don't know how good it is, if you look closely at his driver's license, you can kind of see it.
Okay. What's the top
Brilliant. That's it. So if everyone just spends 2 minutes just counting them up, just 1 point per right answer. And yeah, I just want to say, if this is going on YouTube, Cointelegraph and ProProfs.com, I'd say maybe 8 of the questions are from them, but they were really useful when making it. And it's not an easy quiz, honestly. I was thinking about it. So sometimes, especially when you see faces, you think, I know them, but who are they?
Yeah, it is a bit like that.
It's so annoying.
Anybody get over 30?
30. Well, I think there's
24 questions.
Yeah, 24. 26.
Yeah, but there's more than that. There's quite a few.
Oh, yeah, there's a few. Yeah.
There's over 30 points to be had.
Anyone over 20?
Yeah, I'm
24.
Yeah, I'm 24.
Wow.
23. You beat me.
Anyone over 24? So that's it. That's the highest ones then. So it's
Sue, you won the socks. I can't win it. It's not allowed.
Okay, you got the socks.
Sue, you were Litecoin socks.
Oh my god! I'm never going to wear a pair of Litecoin socks.
You must do. We insist.
If it hits $100,000, then Bitcoin, you'll have to wear.
Consider them donated.
Well, we've got 23 if Sue doesn't want them.
I got 23.
Okay, well, you can have 1 sock each.
I donate them to the
glove pocket.
I often wear odd socks.
So, Susan, are you donating them to Chris then?
Yes, I'm donating my socks.
Oh, really?
Thanks.
Oh, Chris, we're wearing your Litecoin socks. That's very good.
I definitely wear Litecoin socks. I quite like Litecoin.
I love them. So just send me your address on Slack, Chris.
Perfect, that'd be great. Thanks very much. Much appreciated.
Okay. Thanks, everybody, for your time and for your patience sticking with it. And I'll wind the call up here. If you have any feedback, feel free to come back to me. My address, you can actually write to Nigel at nigeltimperley.com. I also have a blog site you can look at called nigeltimperley.com. I'll send the link round to anybody whose email I've got, and I'll stick it on Slack so you can look at this again on YouTube if there's any bits you missed or bits you want to check again. If anybody else wants to get a pair of Litecoin stocks, Alex is your man. Okay. Thanks very much.
Brilliant.
Yeah.
Okay.
Thanks, Nigel. Well done.
That's all right. That was good. Cheers, guys.
Cheers, and one last thought before I go. I just want you to see this screen, okay? I just want you to see this screen, so just bear with me. I think this is something you should take away from tonight, no matter what else happens, okay? So just bear with me. It's a very important screen. That is how long it is for the next halving. 1,458 days. I'll see you all on the 9th of May, 2024.
Oh, wow.
Cheers. Cheers, all.
Cheers, guys. Thanks a lot.
Thank you. Bye.